In the world of Silicon Valley, $380 million is usually a finish line. For most startups, it's the "we made it" moment. But for Anthropic, it was just the opening bid in a game of high-stakes poker that might be inflating one of the biggest bubbles in tech history. Today, Anthropic is a household name in AI, valued at over $18 billion. But to understand how we got here, we have to look back at the moment the safety rebels walked out of OpenAI and why their quest to build a moral AI triggered a massive, multi-billion-dollar arms race. It started with a disagreement. In 2021, Dario Amodei, then a VP of research at OpenAI, along with several key researchers, grew concerned. They felt OpenAI was becoming too commercial, too fast, and sacrificing safety for scale.
And the second was the idea that you needed something in addition to just scaling the models up, which is alignment or safety. You don't tell the models what their values are just by pouring more compute into them.
They wanted to build a constitutional AI, a model governed by a set of rules it couldn't break. So, they left. This wasn't just a talent drain, it was a philosophical schism. When they formed Anthropic, they weren't just building a competitor to GPT. They were selling a different vibe. They were the safe AI company. And that narrative was worth a lot of money. Enter the Series B. In early 2022, Anthropic raised $580 million. But the core of their momentum was built on an earlier $380 million injection. This is where the bubble talk begins. Why? Because Anthropic didn't have a massive user base yet. They didn't have a viral product like ChatGPT. What they had was compute demand. Here is the cycle of the bubble. 1. Cloud giants, Amazon and Google, invest billions into Anthropic. 2. Anthropic uses that same money to buy compute power from Amazon and Google. 3. The cloud giants report record revenue. Anthropic gets a higher valuation. On paper, everyone is winning. But skeptics ask, is this real value, or just a sophisticated way for big tech to recycle their own cash to inflate their AI divisions? To be fair, Anthropic isn't vaporware. Their Claude 3.5 model is arguably the best coding assistant on the market. They proved that a smaller, safety-focused team could actually beat the OpenAI giant at its own game. But the bubble isn't about the quality of the code, it's about the burn rate. Training these models costs hundreds of millions per run. To justify an $18 billion valuation, Anthropic doesn't just need to be good. They need to be the infrastructure for the entire future of the economy. So, did Anthropic create a $380 million bubble? They certainly created the template for the AI craze. Take the smartest people, give them an astronomical amount of cash, and hope that safety becomes a profitable moat before the money runs out. If Claude becomes the brain of the world's corporations, it's the deal of the century. If the AI hype cycle cools down before they reach profitability, that $380 million will be remembered as the first domino to fall. The question isn't whether the tech is real. It's whether the math is.